The BSP index suffered its worst day in nearly 2 weeks as off-cycle monetary tightening by central banks here and abroad continued to spook investors. It fell back to 6,100, a level not seen since July 4th. Week on week, the main index was down 2.6%, reversing last week's gain. This week's losses now meant the Philippine Stock Barometer has slumped by a deeper 13% from how it began in 2022. Rising interest rates historically prompt investors to shun stocks and look for safer assets. Already, stock brokerages PhilStocks and Regina Capital are reviewing forecasts for the year after the Bangko Sentral ng Pilipinas' unscheduled rate hike sent shock waves through financial markets. It does not help that when investors look at the U.S. Federal Reserve, it's the same narrative. Money won't come easy. Another measure of sentiment, portfolio flows. Outflows persisted for a seventh straight session even as most stocks see their prices hit bottom. Still, higher interest rates should be a boon to the peso, which BPI lead economist Jun Neri expects to be more stable at 55 to 56 per dollar.
For the stock market, it's a reassuring development because, if you're a foreign investor, you will lose a lot of money if you come in the lower exchange and then sell it at a higher exchange rate. You will get less dollars for the same amount of pesos you invested. But now that you can sense that the BSP is there and willing to do what it can to prevent inflation from picking up further, they also feel like the depreciation pressure from here is not going to be like what it was a month ago.
An outlier is Emperador of billionaire Andrew Tan. The company shares began trading on the Singapore exchange midweek, drawing in more investors who cannot trade the stock here. Emperador gained 1.7% in local trade, enjoying a 2-day rally. Lois Calderon, CNN, Philippines.